Good evening, everybody. It is currently 5 o'clock, which is, I believe, New York afternoon session. And we are, well, for the next hour, we should expect some slow movement or at least liquidity handling, and then, of course, potential move. Just to highlight news, check news first. So today we really had USD news. It was just a speech, and it's in an hour. Next, tomorrow we have CB consumer confidence, which is also orange news. So the only real high impact news we have starts from Wednesday, and it's only over Wednesday and Friday. So Wednesday, Monday, Tuesday don't have much. The Wednesday news is CPI for AUD, and we have some prelim GDP quarterly information, as well as course PCE price index monthly, and then AUD CPI, and then trim CPI. Well, it's just CPI actually. And then Friday we have CAD GDP month for month. Then we have a speech, and I'm not sure what this is. I mean, it's last time it was September 2024, so basically happens once a year. So it's fair I don't know what this is, I guess, because normally I should know them all off the top of my head. It reminds me of kind of NFP vibes, but I don't know how actually impactful it is into the markets. I'm assuming it is quite impactful, just because I mentioned NFP, but we'll see. So as we have as our custom, we start with DXY. And we get our bias for the week. So I would recommend when new to redraw every week, just so you don't have a bias going into then the following week. But this is our markup from last time around. We had this fair value gap on the daily time frame. We then had a low created here. We came right down, created equal lows. Following 2 days, we swept it, and it looks like we are pushing upwards. But why are we pushing up? We're pushing up because we have a fair value gap, and there's areas from this high to this low that we have optimal trade entry, which is this order block and order flow that we could potentially expect some sell-off. So we are bearish, but we would like for price to get to this area and then pull down. And if it's going to continue, first we'll be targeting this low, then we'll be targeting this low, because this is also equal lows right here. That should probably show by dragging this backwards a bit. And then that will be our next pool of liquidity we believe price will take. So to posture ourselves, we expect this early push here. By Tuesday session, I would have expected price to have made the high, and then Tuesday London session, I should say. And then from then on, a potential of opportunities for sell. So carrying that into these pairs, which is DXY being bullish for the short term, and then overall bearish. Taking that here, we now are for the index, oh sorry, that was the index for the Euro pairs and XXX USD pairs. We expect for price to go down and then go back up. So start on the weekly time frame. We've been quite bullish. See 1, 2, 3, 4 weeks in a row we've been bullish. So based on that logic, why would we not continue being bullish? Sorry, it's plausible. Going to the daily for context, we can then see we've taken out this liquidity here. That DXY area makes sense because we also have it shown over here. That double wick for over 2 days, taking out this liquidity that we almost formed with this and this. Well, we did form it here, but we almost formed equal highs pretty much here. So retail sees this as support, or rather resistance, and then they sell from here, and institutions see that area as liquidity. They buy into it, take it out, and then now there's opportunities for potential sales. And where you sell into, and what is your overall plan? Well, we've taken out these areas of liquidity, and if we're still bullish, it'll be the next high we look for. You can see here this was a bearish move, right? Why is it bearish? Well, we can see the underlying tone is bearish, and it created liquidity at each point of these highs. So then when we're bullish now, we expect price to take out all the highs. Took out this one, took out this one, this is the next one. The only thing I would say is a caveat is that from here to here we're bearish, or from here to here we have this high low, pullback, high low, pullback. So this could also just be part of the pullback rather than it actually reaching all the way up here. And if we look back at DXY, you can also see bearish, pullback, bearish, pullback. This could also be a part of the pullback, but how much is it going to go up? Obviously, up here means down. So how much is going to go? It could go down a bit. It might not reach this area, and it might just continue up. But you do have the idea that this was consolidating for a while. We took out buy side, and now we could be going towards buy side slash just changing market direction. So taking that back into EU, we are going to be cautious for both sides. And in terms of ideas for sell, we haven't seen yet any large displacement to the downside. We do have, well, now we have equal highs over here as one. As two, we have a lot of space over here. So I think his logical price was to go back in here, but I also believe that this area could be seen as an area for price to actually bounce from to then go to the upside. We do have a little bit of order flow here, which could be the area of which price uses to bounce back up from. Something like this looks cool. So that's DXY, but what I'm going to do differently this time around is last week we only focused on DXY pairs. For this week, I want to expand a little bit, just mainly looking at pairs rather than indicators. And that's by indicators, I don't mean these indicators, I mean the DXY indices and sentiment outside of TradingView. bit on my shoulder. Feel a spot. Right. My initial reaction to this is that we failed to take out this low, right? And this low, albeit in a fair value gap, is now created equal low. So retail's going to be seeing this as an area of support, which means that smart money will be seeing this as an area of liquidity. So with that being said, how do we take this out? And I was thinking, okay, are we bullish or bearish? You can see here we're creating these lower lows and lower highs. Here we took out one of the swing highs, but then that was part of the push to the downside, and that created the overall trend to meet this low. Now it's about, okay, do we continue or do we go further on? So one of the ideas is to go from this swing high right here to this low and say that we're in this area to go down. And that would then mean that we'll need a confirmation on a smaller time frame. Where's this GPNZD? Okay. So to do that, I like to mark out time. We haven't really referred to time here, so we're going to go to a smaller time frame. Number one. Number two, we're then going to, well, let me just go grab the highest time frame for this fair value gap. So we have one there, wait. Make it black. Let me just check the time really quickly. I have to start getting ready yet. Okay, that time's wrong. Oh, I've been going off at the wrong time today. Okay, so coming up to optimal trade entry here. This is between 797 and 5. Then price pushes up into it. We could potentially look for sales, but we'll need something on smaller time frames to confirm it, which would just simply be the same thing happening again on a smaller time frame. So this is GBP NZD, and the context as well is defined by our targets, and the confirmation will be on a small time frame. So essentially what we're looking for is a bullish trend, which is what we have right here, and a bullish trend to show signs of it being over, which would be displacement, retracement, enter. Well, sweep, retracement, sweep, displacement, retracement, enter, in that sequence. So that's opportunity one. Now, here's the thing, right? Because it depends on your perspective. You could say, oh, why are you getting here? Why not get up here? Well, why? Because look at this structure. It's supporting us. We have our target. Like, even if price, for example, doesn't give us the opportunity we're looking for, but then it comes up even further, right? And it uses this as the turning point. Well, we're using our entry model to filter out when price is very bullish. Because if price is very bullish from this moment here, you can see this is on a smaller time frame. But if it's bullish all the way up, our entry model would not really be giving us many sells in the bullish market. So when it does, I know it's like a reversal almost, but it depends on your perspective. On one aspect of things, it's a reversal. Another time frame, it could be looking like a pullback. So it just depends on your perspective. But when price is very bullish, entry model, my entry model anyway, doesn't give me many opportunities to sell. And I think that's very, very important if you are going to be having a strategy that does base off of one time frame having a reversal, whether it be 1 minute, 2 minute, 3 minute, or larger. So that's my posture, my opinion, and my ideas. So that's why I'm here. And even if it doesn't trigger, that's fine. But if my instrument does trigger, then I believe that this is the area the price is going to go down from. That's my philosophy. And obviously, this is only true. Like this right here would not be if this wasn't a case. If this wasn't the case, this doesn't mean anything. It's just thingy. It's, what's this thing called? Speculation. Because there's no target. So I wouldn't be selling. What am I selling to? What am I buying to? It doesn't make sense. But then because we have that target right next to price as a magnet, we then obviously believe that price can actually utilize it as the area for the next place it's going to be at. For example, this, let's just say we had this as a target and we're back in time. This came up to what? The 7-9 level and ended up going all the way down to meet this previous low. But this is only true because we had this target. Now, obviously, just on its own, this is not good enough as a target. It would have to match up to something like here's a fair value gap. It seems like on large time frame, we have to have a strong reason the price wants to go down, and this is one of the areas it's going to get through. Other than that, though, and I probably would have used this low instead of this low down here. But you can see we were following that blueprint of things. Now, obviously, from here to here, we don't actually. I guess you technically have it here at the 0.5, and you get the sell off. But I would be waiting for OTE personally. I prefer OTE, so I may have missed that, which is fine. But anyway, this is our idea for now. Set an alert up here for the next 35 minutes. So this time is wrong. 7:25. I did reset my computer like multiple times. Let me just okay, there we go. That's the real time. Technically, you could get in now because it may not be OTE, but it is. Thingy. Do we have a alert on the small time frame? So I would need for price to break a swing low. So something like this, for example. Okay, let's just move on. I did explain that one in a little bit more detail than normal, so so I just read the funny message, so I'm just trying to hold it in. Another thing I like the most is that Tuesday, Wednesday for me are my favorite days to trade, as opposed to Monday, Thursday, Friday. I think Tuesday is the sweet spot because I think most of the time by that time, the low high of the week has been formed, which gives you clearer sense of direction. I just like this when it happens like this. It's not clean displacement. Yeah. So what I'm doing here, I'm just marking up the charts and then looking for areas of targets. So like, where's this from? This is my old like marking up. Okay, I want to show you guys another method. So as you can see, price is moving slow, right? Or rather, we're looking at all of these different options. We're not exactly finding anything that's like screaming at us. We do have overall ideas, but this is probably the closest to entry. So what I want to do is go to the 15-minute time frame on each pair and then just see if we have our entry model being triggered. Once we have our entry model being triggered, then we can start looking for context. So I'll show you an example if I see one. Okay, wait, this could be one. So I'm gonna show you an example, right? So this one got triggered. Let me move all these old drawings. So the first thing to do is to then go to the daily time frame. Once you see your entry model, don't mark up your entry model. Just look for it being triggered. Then once it's been triggered, you then zoom out straight away. Don't get any bias. And then you basically dress down the chart. So essentially what I've just done, rather than go through each pair one by one, you know, taking my time through for each one of them, it's quite good to do this. It speeds up the process, and I have to leave them out stream anyway, maximum 20 minutes. So I want to finish the next 5 and then maybe round up for the next other 5, so it's 10 minutes essentially. So what that looks like here. So first of all, market structure, we're bearish, right? We're making these low lows, low highs. If you look at the general gist of price from the most recent times, we're seeing that there's more black candles than green. Black means bearish. So there is that aspect of things. So I do notice a market gap over here. So I'm going to make it green. So we have a market gap here. Doesn't mean anything, just have a market gap. We also have this black as well. This is from the base of the order block right here. This is fair value gap. It's got to be a darker color. I might prefer using a different color. Just use red. Gray is a bit mid. And we actually have the order block itself. There's so many little, I don't know what you call them, liquidity pools. This is a singular right here. Next kind of major area will be this place right here. This is my overall target down here. Swing high, this is swing low. And then zoom in a bit. So context, we see this is the range from the swing high to swing low. We also see that we have an order block here, which is this gray box. That midpoint, or that black line is the middle point. We are currently in from this high to this low, the optimal trade entry. within that optimal trade entry, we can see there is fair value gap here, fair value gap here. So we're currently in a fair value gap, and there's also one up here, which is all layered and nested, because we have this, which is inside of a order block, as well as the optimal trade entry. This is orange, number 1, and then orange, number 2. So we're currently in the number 2, which is this area here, and then there's one slightly above it. This red line is the fair value gap in a larger time frame. So the first candlestick contributing to both these fair value gaps are quite similar in distance, being that this one is over here, so you might as well use this. Add a couple of pips, that takes it to around 40. Your target is this low first, and then obviously overall target for running over or letting the trade run is over here. So now we need confirmation. Is this going to continue on down from where it's at, right? And then you can zoom in. For this is the 4 hour time frame. Let's go to 30 minutes. So over here we can see that. Let's get rid of this first. So over here we can see this is a swing. Well, this is the low right here, which got taken out, but there wasn't displacement. What made me even look for this actually? Hold on, because this is not the entry didn't exactly get triggered. The reason why I didn't get triggered is because first of all, we didn't sweep anything, but that's fine because it could also be a retracement into a fair value gap, which is not as strong as a sweep, but it's also plausibly identified as a substitute to a actual sweep. However, I do not see a displacement. That's the most important thing. So we don't have the confirmation, but the general gist was there. So maybe price is going to go up a bit more. Like I said, the entry model filters out opportunities. So the entry model didn't get triggered, and that's why you have to stick to your strategy, because it's very easy for me to say, you know what, I didn't see exactly a fair value gap, but I'm going to get in anyway. No, until I see displacement, there's no confirmation. So because of that, I will not be entering, and that was not bad. But let's go back down to 50 minutes, see if we can find any entry model triggers here. Close again. Let me see different. Potentially. Let's have a look. This could potentially be a sell. Just took out liquidity over here. Displaced downwards. We're tracing up into OTE, which is where we're currently at. We do have this market gap, which will be our target. So if we take that low as the area right here, then any cell we enter over here makes some sense. We'll just have to, I don't know where, let's just put it here for now, just for sake of example. This would be kind of the trade we take, but I just want to confirm if I want to actually even be in this, because why would we want to get in? Okay, there's a fair value up here. Okay, now let me go back to there's not really any direction here. When there's no direction, I look for just liquidity pools at that rate. It's a pretty simple sell idea. I'm going to use something like this. Into this. I haven't posted on Telegram for a while. So good. Again. Well, just a casual trade over here, nothing crazy. Cool. I mean, Not, I'll be so honest, not much. But truly, options are limited. We don't have many trades as options. So I'm just gonna enter this. So 1 to 2, nothing crazy. And I've entered very, very, very small amount. So yeah. The reason being, I wanted to kind of show you preparation from a different angle. More so, what I was actually trying to do was find preparation where we actually get something that's worth looking for, which was EU. But our main strategy, we don't see it. Like we have to wait for Euro USD to even get here first, and then we get the confirmation. So there's a lot of work for price to do. That may happen by tomorrow, but in the meantime, we have this scalp idea, which is just a quick 1 to 2, and is an afternoon session trade. So the idea behind it is that we have a opening gap from the market open, so a gap from the market open over here, and realistically it's higher than this, but we actually have, why is it so large? We actually have the unfilled portion amounting to here, closed here, and here. So this is the range right there. Obviously the sell-off is right here. Our overall target would be to fill the gap completely, but that's very optimistic. We took some liquidity here upwards. We then had that reaction to get us back into the range, and that pull back to OTE, which is what's causing us to sell off. It's a little bit on the high risk side of things because we have such a lot of bullish momentum, and there's no clear direction for me personally on this time frame of things. So lack of direction, lack of clarity on direction. Price could very much just go up, but like I said, I entered a very small amount. It's quite passive. It's a quick trade, and it's an afternoon trade. So that's my reasoning as to why I entered it, and I'll just be monitoring this over the weekend. So not week, sorry, over the day. And if I'll probably end up closing latest 10. So it's 26 basically. So in about 4 hours and 12 minutes, we'll know. 4 hours and 11 minutes, we'll know if this trade was successful or not. But in the meantime, that's all for today. We just prepared a little bit differently than last week. Not exactly what I wanted to do. So I do have to wait for the market conditions to show you what I want to show you. So rather than spoil what it is, we'll hopefully next week we will see that play out, and then we can actually talk about it. But at least we got a trade, albeit an old strategy, an old way of thinking, not bad way of thinking, just older, less secure. You have to enter more trades to be profitable, lower risk in terms of every trade, so you can obviously satisfy risk management. So that is everything for me today. It's been your boy CJC, and I'll catch you guys tomorrow. Thank you for watching. Peace.